Hey there, investors of tomorrow. Welcome to Conquer the Market, your one-stop shop for cracking the code of the stock market. We're about to embark on a thrilling journey into the world of stocks, where companies and investors come together in an exciting dance of supply and demand. Imagine a bustling marketplace, but instead of buying and selling goods, here you're trading in pieces of companies. These pieces, known as stocks, are like tiny keys that unlock a share in a company's success or failure. This vibrant bazaar of possibilities is what we call the stock market. So, why do companies sell stocks? Well, just like a tree needs water to grow, companies need funds to expand. By selling stocks, they're essentially offering up slices of their business to investors who believe in their potential. In return for your investment, you get to share in the company's journey, enjoying the fruits of their success through dividends, or weathering the storms if things don't go quite as planned. But what's the appeal for you, the investor? Why choose the stock market over, say, a beach vacation? Here's the deal. The stock market is like a growth engine. While your money might just sit in a savings account, a well-chosen portfolio of stocks can help your funds work harder and smarter, potentially outpacing inflation over time. It's like planting seeds today that could grow into a lush financial garden tomorrow. Now, not all stocks are the same. They come in all shapes and sizes, each with its own unique characteristics and potential. From common stocks that give you voting rights and a slice of the company's pie, to preferred stocks that offer fixed dividends but often no voting rights, to growth stocks from young, ambitious companies that could offer sky-high returns, and value stocks from established companies offering stability and consistent dividends. The stock market, my friends, is a living, breathing beast, constantly moving to the rhythm of supply and demand. It's an unpredictable dance, but with a cool head and a bit of research, you can learn to move with the market and make it work for you. This, my friends, is the essence of the stock market. Now, why would you choose the market over that beach vacation, you might ask? Well, just as a gardener sows seeds to reap a bountiful harvest, investing in stocks plants the seeds for a potentially fruitful financial future. You see, the stock market is like a growth engine. It's a place where your money doesn't just sit idly by. Instead, it rolls up its sleeves, gets its hands dirty, and starts working for you. When you invest in stocks, you're essentially putting your money into a company with the expectation that it will grow over time. As the company flourishes, so does your investment, multiplying your initial input. But why the stock market and not some other investment? Well, historically, the stock market has proven to be a powerful wealth creator. Over the long term, it has the potential to outpace inflation, the silent thief that slowly erodes the value of your hard-earned money. While your savings account might offer a small interest, it's often not enough to beat inflation. On the other hand, a well-chosen portfolio of stocks has the potential to do just that and more. Think about it this way. If you were to bury your money in a jar in the backyard, it would still be the same amount when you dug it up a decade later. But if you were to invest that money in the stock market, there's a good chance it could grow, possibly even doubling or tripling in value. Now, investing in the stock market isn't a guarantee of making money. There are risks involved, and it's possible to lose the money you put in. That's why it's crucial to do your research, diversify your investments, and think long-term. But here's the kicker. While there are no guarantees in the stock market, there are also no limits. The potential for growth is virtually limitless. And with careful planning and a bit of patience, you could see your money grow in ways you've never imagined. So why invest in the stock market? Because it's like planting seeds that, with time and care, can blossom into a beautiful financial garden. Not all stocks are created equal. They come in different flavors, each with its own unique personality. Just as you have a variety of choices at your favorite ice cream shop, the stock market offers an array of stocks to choose from. Let's dive into this delicious variety. First up, we have common stocks. These are what most people think of when they hear the term stocks. When you buy common stocks, you're buying a piece of the company. You become a part owner, which means you get a say in the company's decisions through voting rights. If the company does well, you can enjoy a share of the profits or dividends. Next, we have preferred stocks. These are a bit like the VIP section of the stock market. Preferred shareholders get their dividends before common shareholders. Their dividends are also typically higher and more regular. However, they usually don't get voting rights. It's like being a guest at a party. You get to enjoy the feast, but you don't have a say in the menu. Then we have growth stocks. These stocks belong to companies that are expected to grow at an above-average rate compared to other companies in the market. These are the high flyers, the go-getters. Investing in these companies can be a bit like riding a roller coaster. There might be some ups and downs, but the potential for big returns is there. Finally, let's talk about value stocks. These stocks are like hidden gems. They belong to companies that investors believe the market has undervalued. This could be due to a variety of factors such as economic conditions, public sentiment, or temporary business setbacks. The idea is that eventually, the market will recognize the company's true value, and the stock price will rise. So, whether you're a thrill seeker or a steady sailor, there's a stock out there with your name on it. Remember, the key to successful investing is understanding what you're buying, doing your research, and staying true to your financial goals. Now let's continue our journey into the world of stocks. The market is a living, breathing beast, constantly dancing to the tune of supply and demand. Each beat of this dance is a transaction, a handshake between buyer and seller, agreeing on the value of a tiny piece of a company. This value, or the stock's price, is a reflection of the company's perceived worth and its potential for future growth. Now let's imagine a scenario. Picture a tech startup that's just launched a revolutionary product. Investors are buzzing, and there's a rush to buy its stock. As more and more people want to join the party, the stock's price rises like a hot air balloon lifting off. This is demand outstripping supply, and it's how bull markets, or periods of rising stock prices, are born. But what goes up must come down. Let's say our tech startup hits a snag, there's a glitch in the product and customers aren't happy. Investors start to worry and some decide to sell their stock. As more people join the exodus, the stock's price falls like a deflated balloon. This is supply exceeding demand, and it's how bear markets or periods of falling stock prices come into play. Navigating these market movements can feel like trying to tame a wild stallion. It's thrilling, but also daunting. That's where research comes into the picture. By staying informed about a company's performance, industry trends, and economic indicators, you can make more educated decisions about when to buy or sell. Think of it like being a detective, sifting through clues to predict the market's next move. It's a complex puzzle, but with patience, diligence, and a dash of curiosity, you can start to decipher its patterns. But remember, the market's dance is often unpredictable. Even seasoned investors can't always accurately forecast its twists and turns. That's why it's essential to keep a cool head and not let emotions dictate your decisions. In this dance of dollars and cents, knowledge is your most powerful asset. So arm yourself with information, stay flexible, and remember to enjoy the ride. After all, investing is as much about the journey as it is about the destination. Remember, this dance can be unpredictable, so keep your cool head and do your research. So, how do you snag your ideal stock? This is where brokers come into play. Think of them as your financial matchmakers, connecting you to the bustling world of the stock market. They bridge the gap between buyers and sellers, helping you to navigate the intricacies of the marketplace. When you've spotted a stock you're interested in, you place an order through your broker. This order is like a formal invitation sent out to the market expressing your interest to buy or sell. There are two main types of orders you can place: a market order and a limit order. A market order is like saying, "I want this now, no matter the cost." You're asking your broker to buy or sell a stock at the best available current price. However, caution is advised, as the market can be volatile and prices can shift rapidly. On the other hand, a limit order is like setting a budget for your shopping. You specify the maximum price you're willing to pay if you're buying, or the minimum you're willing to accept if you're selling. It's a safer bet, but there's no guarantee your order will be filled if the market doesn't reach your set price. Now, let's talk about timing. You can choose to have your order executed immediately or at a specific time and for how long it should remain open. These are called time and force instructions, and they offer an extra layer of control over your trades. Finally, remember that investing is not a sprint, but a marathon. It's about making informed decisions, staying patient, and weathering the market's ups and downs. It's about understanding that the market is like a roller coaster ride with its thrilling highs and daunting lows. But with knowledge, strategy, and a bit of courage, you can conquer this ride. Armed with knowledge and a solid strategy, you're now ready to step onto the dance floor of the stock market. See you at the top.